ago, FEMA advised that they will be realigning the flood zones around the state. And suddenly our guest speaker became the most wanted woman in Hawaii. So Carol Tyau-Beam is the state coordinator for the National Floodplain Insurance Program, which is connected with FEMA. So she is here to tell us that gone are the days where you can look at an old MLS and get the flood zone off. Right. You have to do your own research because it could be a litigation issue if you come down to the wire and you've got the wrong floodplain designated. So without further ado, and this is her assistant, Kristen, but this is, wait, before I do that, our coffee sponsor is Lisa Heineman. Come on up, Lisa. She's with me.
Thank you. So I am like a full-fledged flood geek. That's what I've been told, and I'm proud of it. I'm a property owner myself, so when I talk to folks, you know, I come from that background. You know, I know that you guys have a super important job. I mean, once a buyer, now a property owner, I rely heavily on my realtor. And, you know, I expected you guys to know everything. Where's the great schools and bus stops and this and then everything. And even, am I in a special flood hazard area? The things that I'm going to tell you today is so important because it's just one aspect of your job. You guys have to know so many different things, and I'm sure it's super hard to just kind of get all of that in perspective of what your buyer or even your seller wants to do with that property. I hope that this is going to help you in your work, and it's really important. The other thing that I want to kind of mention is that not only do you folks to know about the flood stuff, it's important, but it's to surround yourselves with other professionals that understand the flood program. Really important. Lenders, real estate agents, surveyors, architects and engineers, and that's my background. I just want to let you know that I'm not an insurance professional. I do not have a background in insurance. I am a civil engineer, and that's my background. And so I'm going to go into the regulatory portion of the program as well, because that also is just as, if not, to me, more important than the insurance side, because that you guys understand when a person buys a property. You know, hopefully, if it's in a floodplain, they know that they're going to need flood insurance. But there's other aspects of the property that they might not understand at face value when they buy it. And that comes on the regulatory side of the program. Appraisers, you know, you name it. There's many stakeholders to this program. So I kind of want to dive into this presentation called Understanding the National Flood Insurance Program. So just to give you an understanding, if you can imagine that the NFIP is a program that balances on a three-legged stool, all right? One leg of that stool is the flood hazard identification. That's the mapping component of the program. That's where FEMA maps the floodplains and we identify where the high-risk zones are. There's the flood insurance component that you guys are probably well aware of when you need flood insurance. And then there's a floodplain management portion. That's kind of more in my wheelhouse, where regulations and building codes apply. All right, so I'm going to go through each portion of that, the program. So, flood hazard identification, the mapping portion. This is what we call a firm insurance rate map. And that's what the actual flood insurance rate map panel looks like. FEMA doesn't print these anymore. This is the olden days. They used to print these Z-fold panels, and that's how the determinations were made whether you needed flood insurance or not. Someone would go and look on this panel at this scale and try to figure out where your house was. Actually, before there wasn't even aerial imagery to figure out where your house was. There was just a street name, you got to kind of figure out by scale where your house is. And that's how somebody said whether you needed flood insurance or not. But FEMA has, modernized the program. They've improved on their mapping, and now we have maps that are better, not perfect, but better, that establishes what we call the 1% annual chance or 100-year flood. And in a lot of areas, we have the base flood elevation, or you hear the term BFE. And that's where FEMA determines what that flood elevation is going to be at this 1% annual chance event. And I'll kind of explain the significance of what that BFE means. So when people ask me or tell me, oh, I don't live in a flood zone, I said, yes, you do. Everyone lives in a flood zone. It depends upon your risk, whether you live in a high risk or whether you live in a low to moderate risk. You even may live in an area called a D zone, an undetermined risk. But you do have a flood zone designation. You all have this flyer in your folder that tells you the different types of flood zones. So the high risk are going to be designated either A or V. And within the A's, you'll have something called either an A, AH, AO, AE. In the V, you'll have V, VE. These are typically riverine type of flooding. These are coastal flooding. We do see A's like in a coastal, behind a coastal V zone. And we have low to moderate risk, B, C, and X. B's and C's were last seen in Maui County, but we no longer have those designations in Hawaii. So we'll see X, or you might see some shaded X. And then there's a D zone, undetermined. So the important part to know is the high risk is where flood insurance would be required if you're going to have financing, or if you're going to do any kind of new construction or substantial improvement. And I'll get into that. Now, that's not to say that you couldn't buy flood insurance in the other zones. It's still available. Sometimes some people say, I can't buy it if I'm not in this high risk. Yes, you can. You buy flood insurance. It's available for all zones. Now, this is an important concept to understand: pre-firm versus post-firm. How many of you know what pre-firm or post-firm means? No? Okay, good. Important thing for you to learn today. If you do business mainly in the city and county of Honolulu, I put all the dates here because I do presentations on all items. But September 3rd of 1980 is an important date for you to remember, because that is when the city and county of Honolulu joined the National Flood Insurance Program. It is a voluntary program, so the city, opted to join. And when they did join, flood insurance was made available. FEMA made flood insurance available to the community. In return, what they had to do was they had to establish floodplain management regulations that said that they were going to build to a certain standard. So on that day going forward, all new construction, substantial improvement had to be built to a certain standard based on the flood insurance rate map. So we call that post-firm. Anything that was built before that date, we call pre-firm. So if you can imagine, these folks, they were built, we have a lot of older stock of homes that fall into this category. All right. And when I go into talk about insurance, I'll kind of explain how, if you recall, in 2012, bigger waters kind of had an effect on these pre-firm homes, these older stock of homes, and what they did to the real estate market. So remember, September 3rd of 1980. All right. So the question is, where do you find the flood zone information used in your MLS listing? This is a real example of a realtor that thought she was doing her due diligence. This actually just came up recently, and I thought I'd add this to this presentation because it was like literally the perfect storm of unfortunate events that happen. Okay, these structures were permitted and completed early last year, and they were listed on December 18th. And the listing agent did her job as best as she, you know, she listed it and listed it in an X zone. You recall the slide before, the X zone is not one that needs mandatory flood insurance, right? And I asked her, she called in a panic because 2 of them are in escrow, and I don't know which one was the one that was giving the problems, but the buyer's agent was saying that we need to get flood insurance. We thought it was in an X zone. Now, you know, it was a long process, but come to find out, I asked her where she got her information from, and she said she got it from the city DPP website. And I said, can you tell me exactly where on the website? And she said, well, she goes through this service called Hawaii Information Services, which I'm sure a lot of you use. And you know, just be reminded, it's a paid service that you use, and they're a third party, and they gather data, they mine data from different sources, and they don't guarantee their work. I mean, because they got their data from the city and county for the flood zone information. And lo and behold, I checked, and the city and county's website, as of this morning, is still showing this property as in an X zone. I actually called the city to say, what's up with this? Because you guys have the GIS data, why aren't you updating your website? See, they're saying an X zone, even the maps are saying it's an X zone. She did everything she could have possibly, I mean, you know, and so now it can be a deal breaker for the buyer. First, they didn't think it was in a floodplain, they didn't need insurance, but the subsequent conversations we had, and I can't really get into it, but you know, the cost of how much that insurance is going to be, and for the life of that loan, is problematic. And there's 4 more properties or 4 more structures that are going to be sold that are affected by a map change that occurred on November 5th. So just a month, just a little over a month prior to that listing. So it went into a high-risk zone on November 5th. But, you know, she was not aware. She didn't know. She did her homework. She thought she was putting the right listing as an X zone, but it actually wasn't an AH zone. And AH, as you know, requires flood insurance. So where do you find the current flood insurance rate maps? Where do you go if I'm telling you that the city who administers the program, now they said they're going to be updating, but they can't give me a time frame as to when that is going to happen. Okay, so what I suggest that you do, there's 2 sources. Obviously, FEMA, that's the Bible. I mean, they created the maps. They are your resource for it.
Is that page with that information?
I'm not sure. And you know, I'm going to make this PowerPoint available to you. I will forward this to you folks so you can distribute this PowerPoint, because there's a lot of information here that I find useful. So the FEMA Map Service Center is one source. And the other source is our map viewer. It's called the Hawaii Flood Hazard Assessment Tool, and you can find that at Hawaii NFIP.org. And just a reminder that FEMA stopped printing those paper maps on October 1st of 2009. So for the FEMA Mat Service Center, this is what their page looks like. And how you would go about looking up a property is you would just basically type in the address down here where I say looking for flood map, enter your address, and you hit search. It's not as, to me, intuitive, or maybe I'm partial to our site, but that's just one way. I wanted to give you choices. Or if you use our tool, if you go to hawaiinfip.org, this is where it'll take you to our homepage. You click on the Flood Hazard Assessment tool, and you can do the same search. It's a statewide site, so you would select your county first. And instead of typing the address out, 1801 Kalakaua, you start typing out Kalakaua, and you hit street, look up, and it'll open up another window and give you all the addresses listed on Kalakaua. And when you find 1801 Kalakaua, you hit that TMK. Yeah? And then it'll give you a nice screenshot. I suggest you turn on the imagery because FEMA, you know, they insure the structure, not the land. So you have a big parcel that you have dual zones, but it's really, we want to see where that structure lies within that parcel. Whether the structure is within that, what we call the special flood hazard area, the A or the B zone. So you want to toggle on the imagery. You can just, this is like an accordion. You click on her. And we're going to hang around afterwards if anybody wants to try it out on their computers. And this is the convention center site. This used to actually be partially in an A zone, but not sure what year remapping it pulled it out. So now it's in an X zone. Here's the zone designation X. This blue one is AE. This is an A. This is an AO. But right here is an X. If you want to print a report of this, you can click report here up on the top. And you get this nice PDF. You can keep in your files. It gives you the screen capture of whatever you had on the map viewer. So if you want it zoomed out a little bit more, just do that before you hit that report button, and whatever you have in that map viewer will capture here on the report. It'll give you a nice legend. It'll give you the front panel and property information. And it'll also give you your county floodplain manager, and it'll also give you my contact information in here as well. All right, so FEMA's maps are always correct. No, we know that's not true. There might be small areas that might be inadvertently included because of limitation of scale, the poor topographic definition of the base map. So what happens in those cases? Well, you know, FEMA has a process that's called a letter of map change process that property owners can actually go through and apply to FEMA to try to get removed from that special flood hazard area. So there's different types. These are the common ones that are listed. A LOMA, letter of map amendment, letter of map vision-based sale, and then there's letter of map revision. These are for larger areas. So let me just give you an example of what a LOMA is. A letter of map amendment is when the natural grade around the house is above the base flood elevation. So if this is the structure right here, the ground surrounding the house, the ground of which the house sits on, is actually higher than the flood height. Not the finished floor now, because some people will say, well, I built high. I elevated my house. Shouldn't I not have to pay flood insurance? You still will have to pay flood insurance if the foundation is subject to waters. It's only if the ground of which the house sits on, the natural grade, is above the flood elevation, the base flood elevation. You could apply to FEMA for a LOMA and try to get removed, and they'll remove just the structure and put it in an X zone. So everything else is still in, say, AE or whatever the zone is. but just your structure will be in an X zone. A LOMAR based on fill is if you put fill grades. So someone might come in and they might have an area. So this natural grade here is below the base flood elevation, but they bring in fill and they raise that fill above the base flood elevation. Now they build their house on top of that. That they can apply to FEMA and try to get a LOMAR based on fill to get themselves removed and put in an X zone as well. So let me give you an example. Boy, first of all, how do you find these? Because this is important. This document, if they get an approval, it's something that they can take to their bank. Now a bank, and Lisa will tell you, a bank, you know, they have the prerogative to you know, require flood insurance just because, you know, over and above what FEMA says. So, but this is a good shot at, you know, at trying to talk with the bank and say, hey, I got removed from the special flood hazard area. Will you remove the mandatory flood insurance requirement? Okay. So where do you find these, or how do you know which properties have an approved LOMA? Of course, the same sources, the MAP Service Center or our flood hazard assessment tool. I tell you that the city doesn't keep maintaining that, so that when the DP updates their site, they maintain the LOMAC information. So you still should search either one of these sources for LOMAC information. So for the MAP Service Center, when you search all products and you search the county that you're interested in, it's down here, it's nested in here under effective products, LOMAC. A little bit more hard to find, but if you go into our site, we have on our menus, letter of map change. You want to select Honolulu. This window will open up and it'll list all of the approved LOMACs for the county. Okay, it'll give it by flooding source, by panel, the type, and it'll even give it by project description, which the FEMA MAP Service Center does not. All right, you can either zoom to the location or you can download that document. That document is the one that you take to your bank to discuss the flood insurance requirements. So this one, for this property at Pihikau Way, somewhere around here, they applied for a LOMA and they got it approved. In fact, the whole association applied for all of it and got the whole thing approved. So I wanted to put it into perspective for you folks. I have a listing, and if someone was to just look at the map, they might think that this particular unit, I think, is a waterfront unit. And if you look closely, if you drill down and looked at this map, the AE zone encroaches into here. The AE zone encroaches into these oceanfront or marina front properties. It could be just this much encroachment, and you know what? You got to pay flood insurance. So someone might just walk away. They don't even want to deal with flood insurance. I'm just gonna walk away from looking at, I'm gonna look at another property. But this, when you search this and you see here, this is LOMAC and there's a bunch of numbers filled in, that means that there's an approved letter of map change for that property. You want to look further. You want to say, well, what got removed? Because obviously there's a lot of structures in here. So this is 150. So when I opened up the LOMAC for this property, sure enough, 150 was removed. In fact, a lot of them, as you can see, this was a couple pages, this was 10 pages long. The association, I know this particular property association went in and applied for the letter of map change for the whole association and got all those marina front properties, and that's a good thing. So what happened was the base flood elevation, let me go back here. The base flood elevation is 6, okay? That's expected flood height. So what they did was they proved that the lowest adjacent of grade surrounding the structure, and probably they took a shot back up here, is 8.2 for this 150 property. So the lag, the lowest adjacent grade, is above the base flood elevation. And that was grounds for approval. So all of the ones that could demonstrate that they were above 6, you just need 6, absolutely 6 or higher, you can get removed. So that's a document that becomes very important for the property owner or future property owner to discuss with the bank about flood insurance. All right. So flood insurance, when is it required? You guys probably know. When the structure is in an A or V zone, anything A, anything V, and you have a federally backed mortgage with you. If you pay off your loan, you don't have that requirement, but just let me tell you that the risk doesn't go away. The mandatory purchase requirement goes away, but your risk doesn't go away. You know, the max still stay the same, okay? But that's when it's required. So, anybody heard of Biggert Waters? Yeah. Unintended consequence. So, July 6th of 2012 is when Biggert Waters was signed into law. And the basic intent of that was to write this program afloat. I mean, it's now probably, I don't know, I can't even keep count. It's probably like upwards of 26 billion, 28 billion, and counting in debt to the U.S. Treasury. And FEMA needed a way to reduce that debt. Now the program has to be reauthorized every couple of years, and it was up for reauthorization in 2012. And so Congress said, okay, well, we'll reauthorize the program. However, we need to start reducing our debt. What are we going to do? So they thought, well, let's look at our rating. We have all these pre-firm, remember I said those pre-firm, those before 1980 homes, those guys, they get subsidized rates because, back then FEMA felt it was kind of bad, like unfair that someone would have to pay actuarial rates for a house that was built, say, on the ground, but now a flood map says that the flood height is this high. There wasn't a map back then. There wasn't regulations that told them how to build back then. So they subsidized the rates. But going forward, post-firm, they had a map. They knew what the regulations were, and so their rates were true risk. So in 2012, Congress, FEMA says, well, no more subsidized rates. But they were going to do this in different phases, but the hardest hit was new purchases. New purchases of these older homes that occurred after July 6th of 2012. But the problem was that those rate changes weren't going to go into effect until October 1st of 2013. And not a lot of people, I'm sure you guys didn't really know that this Biggert Water, or the impact of Biggert Waters was coming down. So what happened was people were buying these older homes in a special flood hazard area. They accepted that they bought these homes in a special flood hazard area, that they had to buy flood insurance, but they accepted the subsidized rate. But what happened was, when October 1st, 2013 came around, upon renewal of their policy, they lost their subsidy immediately. They had to get an elevation certificate, and they had to pay full risk rate. We've seen huge unintended consequences of that because we have a lot of older homes. We have high BFEs or base flood elevations, especially on the north shores of our island. And let me give you an example of one of the probably the worst cases that I saw during this time. So this is a V zone, and I'm sure that this is a property owner that bought after July 6th of 2012, but before October 1st, that didn't know, because I don't think that person would have bought this property. V zone, they actually took the highest deductible. So their annual premium was already up at almost $4,500. That's a lot already as it is. But their renewal, look at what their renewal was. $55,000 a year. That's 1 year. And then every year, the premiums can go up. I mean, that's crazy. That's because they were fully risk rated with a -14. The elevation certificate showed that their finished floor or lowest floor was 14 feet below the base flood elevation. So this was happening all across the nation. I mean, well, a lot of the coastal communities, and Congress, you know, they really didn't know what they signed when they passed it, and they went back and they said, you know what, we need to fix this because this is, we're putting a lot of people out, they're losing their homes because they cannot afford this. And the lender has to make sure that flood insurance is maintained on these properties. So what happened? The new legislation was passed, well, now it's last year, March 21st. We call this the FIA, or the Homeowners Flood Insurance Affordability Act. And what it does is it repeals and modifies certain provisions of Biggert Waters, makes additional changes, but it also leaves some of Biggert Waters intact. So some people think that it was a total repeal of BW12, but it's not. It's not. But I think the most important takeaway for you folks is to know that pre-firm subsidized rates have been restored as of May 1st of last year. And that was announced in their Write Your Own Bulletin, 14014. And grandfathering, one of the provisions in Biggert Waters was grandfathering. They were gonna do away with grandfathering. They're gonna phase out grandfathering over a 5-year period. And grandfathering is when a house was in say an X zone, and then it gets remapped into a high-risk zone. Well, you know, the flood insurance premiums for the two is very different, right? Well, what they were going to do is they were going to say, well, we're going to give you 5 years to phase into the higher risk premium, as opposed to still letting you have grandfathered rates at the old zone, at the X zone. Well, part of HFIA is that grandfathering is still available. So you still can be grandfathered in at that X zone. So that Kailua property that I was talking about, the one that went from that X to the AH, thankfully, grandfathering is available, and those property owners can get the grandfathered policy as opposed to paying an AH policy. Huge difference. Wait. Okay, so some examples of this. So this property was sold on August 20th of 2014, and it was in an AH zone at the time. Okay, so they purchased after HFIA was implemented. So that means that subsidized rates were restored. So they probably purchased, if it was for primary residence, about $2,200. That's what they accepted when they bought this property, if they financed it. I mean, if they purchased outright, you know, they didn't have to buy. Now, after the November 5th map change, It actually got mapped out, just mapped out. So hopefully, you know, the realtor who sold them this, maybe you can go back and like let them know, you know, and say, hey, did you know you got mapped out? That's customer service. What are the property owner's insurance options now? Well, I have to put this there, but I'm not saying that you don't need flood insurance. I mean, it is just a line on the map, and the water doesn't know to stop right there at that line. So, you know, I can't say that you don't need it, but it is an option. You could cancel the policy, that's an option, or you could convert the policy to preferred risk policy and pay less than $500 a year versus that $2,200. And actually, the preferred risk is a package policy with contents, 100,000 in contents. Whereas a lot of times when people are buying the standard policy, they're not picking up contents or very little because they're just getting it for the bank. And the bank, you guys don't care about the contents, right?
We do. Ask us about HO6 policies. We care.
So, you know, this is a package policy. It comes with contents. So those are the options. Now, on the flip side, this property sold September of 2012. This was in an X zone at the time. It didn't have to have flood insurance when it was purchased. Unfortunately, as of November 5th, it went into the high risk zone. Okay, so the lender, if it was financed, is going to be sending them a letter saying that they're going to be needing flood insurance. They're going to give them a 45-day notice to show proof of insurance. But what are the options? You know, instead of paying an AH policy rate, they can get a preferred risk eligibility extension. In April, it's going to be renamed as newly mapped into a special flood hazard area policy. Don't ask me. FEMA has all these weird things. They're going to rename it, but I mean, basically, it's the same policy, and the rating is going to be just about the same, but it's still about just under $500. It's slightly higher than a standard PRP, but it's still under $500.
So can I ask you a quick question? So if the lender sends them that letter that they're going to need it, and you know, Mr. Smith knows nothing about that they can do this, does the lender have information to refer them to, or they're like basically they need to know about
you know, I think I'm gonna let Lisa answer. I mean, I don't think you guys provide. You don't have information on the types of insurance. I think they would rely on their insurance agent to know the options.
Okay, that makes sense.
So that's where I said in the beginning, to really want to surround yourself with professionals in this transaction who understand the flood insurance program and policy. Because I'll be honest, I have dealt with different stakeholders, and I have different flood insurance folks. Some know a lot about it, and some know zero about that this even exists. Well, the agent didn't tell me that, and then they go back and they talk to the agent. If it's within the policy, they could get an adjustment and get the refund. But if they've been paying years and years and years at this, they're not going to get anything beyond that policy year. So that's important, to work with agents that understand the flood insurance program.
If you get a really high quote, I recommend you talk to another insurance agent, because more often than not, it's like she said with my example, the insurance agent had no idea, and we're talking thousands and thousands of dollars per year difference, and it could have, had we not pursued it, it could have killed the whole deal too. So, and it's not just about saving a deal, it's about saving your customers money, you guys being the experts and saying, we go a step further, we know more about this than anybody else, and we're in Hawaii. So yeah, it really makes you look good to the customers too.
And it's not shopping around as shopping around like this, they can sell you cheap, because if they're buying a national flood insurance, we buy here, Kansas, wherever, they're supposed to be the same rate. It's a matter of if they're using the same criteria to rate it, or whether they know about certain products that FEMA has. That's the thing.
So this year, all the lenders are gonna go through this map and look at the changes for all their existing loans.
You know, I'm not sure how often they, you know, every year we do an escrow analysis, and I'm not sure what the procedure is on all the map stuff, and especially because there's been so many changes in the last few years. So I'm not sure what that whole process is, but definitely if the bank finds out that it's in a special flood hazard area, we are required to make sure that there's flood insurance. So you will have that time frame, and if you don't get it, there will be forced placed insurance. And it's, you know, it's always better to get your own, you know, so that you can shop for the agent that knows about all the different, you know, policies and all of this stuff, right? It's like having the CPA that knows all the different tax changes, right?
Usually the lenders don't notify till after, because they can't require insurance on a preliminary map. So right now, the one for Honolulu is effective. So letters have been coming out already to these affected property owners. It's a matter of the lenders' flood zone determination companies as to when they get through, because they contract with a flood zone determination company that manages all their portfolios, and that's all they do is scan for all these map changes. And when they come, they look and they see which ones are affected, and then they come back to the lender, and then the lender is the one that sends out the letters. But it's that flood zone determination company that you guys are serviced with that is the one that are looking out for these map changes. I mean, CoreLogic, I mean, it's like American, there's a lot of these, none of them are here in Hawaii. So sometimes there's discrepancies, and, you know, we have to go back and forth to kind of challenge the flood zone determination company on their determination. All right, this is an important thing that I wanted to mention to you, because this is only applies in City County of Honolulu. Post-firm structures. So these are the ones that were built after the county joined the program. So when the county joined the program, they have regulations that says you got to build a certain way or whatever. The county has to document that the property owner built properly. Now, it wasn't a requirement, but FEMA highly suggested that the form that they used to document that was an elevation certificate. Unfortunately, from 1980, when they joined the program, up until 2003, they weren't using an FEMA elevation certificate form. They were using their own community, community form that they made up. Have the same information, but it's not. It's City County form. It's not a FEMA form. The problem with that is an insurance agent cannot use that form to quote a post-firm policy, and they need that in order to write a policy for a post-firm structure. So, like, for example, this structure for sale on Fern Street is built in 2001. It falls between this date. The reason why I tell you this is because it's going to be a selling point, or it's going to be a talking point between the buyer of this property. If they're financing, it's going to need flood insurance. Okay. The insurance agent is going to ask for an elevation certificate. Then what's going to happen is they're going to go back to the seller and says, "Can I get the elevation certificate?" They may or they may not have it. They may have one only because they needed to get one for insurance purposes, or they might not have one. So surveys cost money. Who's going to pay for that? Is the buyer going to pay for the survey? Or is the seller going to do the survey because maybe they should, because anybody who buys the property is going to need one. I mean, anybody who's, financing it is going to need one. So maybe they should just have it in hand. So for any potential buyer, they can provide that as part of the seller, sales. But that is something that you should consider.
How expensive are they?
It varies. It could be anywhere, 500 to 2,500. Depends on the location. It depends because of benchmarks, the availability of benchmarks. Or the price could be, you could have an area, a rural area that you don't have a lot of benchmarks, say like on the North Shore, but then a certain company has done a lot of work in the area, so they've established their own markers. So they don't have to bring in a line of sight from an established benchmark. They already did work in the area, so they can start closer in to your property. So it all depends. It depends upon the company you go with or the area. I mean, somebody told me that they were charged $6,000. I told that person, I said, you better shop around. Like $6,000 in First Street, and down here, there's like benchmarks everywhere. But that's a topic for another day. But yeah, so it depends. So I just wanted to throw that out there because it's something to consider for post-firm structures between these dates right here. You may or may not be able to get that elevation certificate from the seller. They may or may not have it. And if you have it, you hope that the elevations are good for a favorable rating as well. Okay, this is more in my wheelhouse, regulations. Now, I'm telling you this, but I don't expect you to know the regulations. All I hope to give you is that you know that there are regulations, that they exist. There's flood insurance requirements, but just know, guess what? There are regulations about building in these zones. This is where, if you are so interested in reading the regulations, this is where you can find them. Okay, but the basic premise of the regulations is elevations, obviously, right? You want to get it up above the flood height. So, elevating those structures in A and B zones above the flood height. In V zones, keeping that area below that lowest floor free of obstruction. We don't want anything, a lot of times, it's going to be experts. You're going to drive around the coastal area and you say, oh, how come all that is closed up below, or there's like habitable space downstairs? That's not supposed to happen. Free of obstruction, use restriction. You can't have habitable space in post-firm structures. And I'm talking about post-firm. These are the requirements of these after 1980. There's a zone called AEF or AE floodway. That has even more restrictions. And I don't need you don't need to know them. Just know that there are more hoops that someone has to go through to build in these zones, or substantial improvement.
She saved me from buying one of those.
So, what I think is important is really to understand the buyer's vision for the property. I mean, not just today, but kind of in the future. I mean, what do they have planned for this property in the future? So this is a vacant property, and it's in the V zone. That's the highest risk zone. They're going to build a structure in here, and the base flood elevation is 16. And this is along the coast. Well, let's just say that the ground elevation is 10, just for ease of math. And the base flood elevation is 16. That means that structure has to be elevated at least 6 feet off the ground. Now, the vision. If that person is just going to build and sell, that may be okay. But if that person is going to grow old in that house, I don't think I want to walk up 6 feet, that many stairs when I'm like 80 years old. So maybe that's not gonna be the best thing for me in the future. So what do they plan to do? Because that house is gonna have to be elevated that high, if not higher, if they wanna reduce their flood insurance. And I'll show you how building above and below that base flood elevation affects premiums. Substantial improvement. Okay, this is important because City and County of Honolulu just started this March, May, earlier last year. They weren't part of this cumulative substantial improvement, but substantial improvement is where the improvement cost. So you have a pre-firm home, these older homes. You want to do an improvement to it, and that improvement cost exceeds 50% of the market value of just the structure, not including the land. Once you hit that 50% threshold, you got to bring the entire structure to code, even if you didn't plan on it. That's the requirement. Now, the city has now implemented a substantial improvement rule. What that means is they're going to track permits for a 5-year period. So before, you could do one improvement this year and get up to 49%, and you don't have to raise the whole house. And then next year you do another 49, and you don't have to raise the whole house. Now they're going to track permits for 5 years. So you could do 35 this year, but you do another 25 next, you're going to hit that 50% already, and then you're going to have to, on year 2, elevate that whole house. So Maui and Kauai are really strict. They got a 10-year. So here's an example. This is a house down the street. This is in an AE zone. This is a pre-firm structure, and the listing remark says, build your dream home or upgrade. Now, if you build your dream home, you're going to have to elevate it. You got to build to code. But if you upgrade, if you want to just build out this and just add to this, you have to watch. When I looked at the real property tax assessed value of just the building, it was $165,800. Okay, 50% of that. Complicated part is, and I don't know the answer to this, but I just want to throw these things out there so that you can call the county floodplain manager and ask, because there's 2 buildings on this property. How are they going to divide up that 165? Do they give it evenly to each of these structures? Or is all of this given to one, and once that is met on one of the buildings and the other how is it divided? Understanding how that's going to be allocated to each of these, because there's an ohana dwelling on there that's also non-conforming. Both of them are non-conforming. When will that substantial improvement trigger? Those are the kind of things that you want to know, because the person who's buying that place, when they saw, they're like, oh, they're already running, well, maybe that's engineering. You know, it's like, oh, I can do this, I can do that, I can do this. But if they didn't really know that there are these rules, you don't, like I said, you don't need to know what exactly, but just know the general, that there are these rules and who to go talk to, because it may prevent you from having to, because you're going to have to lift this whole house up, and you might not want to have it higher than that, just a few feet off the ground. All right. Now this, you guys don't have any, Honolulu doesn't have a preliminary map anymore, but I wanted to show you an example of what happened. So if the county has a preliminary map, the maps didn't go effective yet, and somebody is designing a project, and they didn't get it approved by the building department, and the new maps go effective, you're going to have to redesign the whole project based on the new maps. here's an example of one that I'm not sure what's going on, but this was sold July 15th. It was in the D zone, went in the A zone. I don't know if they knew, because I mean, that's like almost 50,000 less than asking. Or no, wait, so, oh, actually, ooh, it's the other way around. I hope they know. It went into the special flood hazard area, but when I looked at the building permit, like right after it sold, they got a demo permit on August 5th. But on August 12th, they put in for a new 2-story single-family dwelling, but there's no issue date on the permit. So sounds like they had building plans in hand. But I don't know what that building plans, how they designed it to, whether they designed it to the new preliminary maps at the time, but now effective, because since this is not approved as of November 5th, guess what? They would have to redesign that. And that's gonna cost somebody money. So, let me just show you. This is building at the very minimum that you need to build to. You build at the minimum, A zone, 1,400, look, B zone, already 9,000. If you build a little bit higher, 2 feet higher, look how much your premiums are reduced by. But if you build 2 feet below, look how much your premiums are gonna go to. So if you got that friend at the building department will turn away and look away, they're not doing you any favors, because your premiums are gonna really jump. So call this guy if you have, or your client has any plans for new construction or some kind of remodel of the property, because in a special flood hazard area, because it's really important. You don't want to be caught surprised. Couple of resources, the Map Service Center, of course, our website. And then for flood insurance information, floodsmart.gov, that's FEMA's official National Flood Insurance Program website. And then we put out a quarterly newsletter. Our last one we did, I put an article out about that substantial improvement, about the renovating and stuff. So you might want to read this article. You can go to our website to read it, or you can actually subscribe. All I need is an email address, and we send out information about upcoming training that we have, or we just email you when our new newsletter comes out, and we post all kinds of good information that I think you might find useful. And then our flood hazard assessment tool is actually going to be upgrading soon. I was hoping for this month, but maybe we're probably going to be pushing it to the next quarter. But we're gonna enhance a lot of the features, and we're going to be able to tie directly into a lot of other sites. So that's going to be coming out, but we'll post that in our newsletter as well if you subscribe. That was a lot of information, but you guys are all experts now, right?
Very good, thank you so much.
Yeah. Do you have any questions, or did I totally confuse you?
Are condos required to have condo buildings?
Yes. Well, now the condos I'm not too well versed on, but I know that what the lenders look for is
We require flood insurance if it's in a special flood hazard area.
Is it included in the maintenance fees or paid?
No, well, yes, usually. Every once in a while you'll hear of a situation where the lender is requiring to get flood insurance and the association doesn't have it. But in 14 years, I've only heard of that happening twice, and both times they got the association on board real fast to get that taken care of, so.
Is it more if you're on a lower floor?
It's not.
Same.
Yeah.
How often on the maps updated?
You know, in the last 10 years, we've had, I don't know how many for Oahu. We had it 2004, 2005. Then 2011 was a big one, and then we just have this one. But there are none on the books right now for Oahu, so hopefully not for a while. The way how maps change is either the county requests FEMA to update it in a certain area, or FEMA will do a study on their own. So a lot of times FEMA people will blame FEMA for a map change, like this last one. A lot of people like in Waimalu and Halava and Kailua blame FEMA for it, but actually it was the county that requested FEMA to study it. The one before that, the 2011 one that affected Hawaii Kai and all of the South Shore all the way up into Eva Beach area, that was a FEMA statewide study. They looked at the South Shores of the whole Hawaii statewide. So that was a FEMA study, but it's not, it's not like we're like some property owner or that kind of thing. They could ask the county, but it doesn't come very often. Although we've had many, just because of the map modernization, they went from the paper to the digital maps. So yeah.
When you were in the Hawaii flood maps and you said to connect to the TMK, click on the TMK, that doesn't connect to the Hawaii Information Service in TMK? It's two different?
Yeah, it'll just go to our web stuff, back to the map.
Is it the same TMK number or is it different?
No.
Those should be the same, right?
Yeah.
But they don't talk to each other.
No, the Hawaii Information Service.
The left and right hand?
Sometimes, right, but not always.
Yeah, anybody have an address they want?
Sure, 91-1026. Oh, you just want the street?
Street first, yeah.
Kaihou, Kaihou. There,
91.
1026. There.
That's a D zone. So in here in this layers tab right here, I open it up and I toggle on imagery. So D zone is undetermined risk. We can zoom out just if you're just curious to see where is the closest flooding source. It's nowhere nearby. But that's a D zone. So here's some D zone down here. Hello, oh, this is Eva. So the 2011 map actually was favorable for the Eva area. It actually pulled back on the special flood hazard area and took properties out. And although they should have made the area behind it an X, but they put it in a D. But that's FEMA for you. So yeah, that's a D zone.
Did anybody ever have trouble getting a USDA loan through in a flood zone D? Did anybody ever? Carol helped me a few years ago. I guess it's been more like 4 or 5 years ago, but USDA, we had a short sale and we were, of course, going on forever. And we finally get the acceptance. It's been months. The next day, we at the bank got a letter from USDA saying we will no longer do properties in flood zone D. And I almost cried. And I don't cry that often, but I almost cried. And I called Carol, and Carol said, did you know that so D is undetermined, that the Army Corps of Engineers has a bunch of elevations, base flood elevation. Basically, we ordered it, we got a elevation certificate, we were deemed above. USDA said, we'll look at it on a case-by-case basis. It cost my clients about $1,800 to do all this, but they wanted the property. We got it through. And they told me at the bank, they were encouraging me, but they said, oh, we don't think that's gonna go through, Lisa, but it did. And so I know that that's not a problem anymore in EVA, but I just wanna show like what a great resource Carol is, that you know, sometimes there's things out there that can be done if you just take a few more steps. It took a little bit longer and a little bit of money, but the clients are thrilled. It was a really great deal, and they're so happy. So they probably send you Christmas cards.
And the one that you were talking about earlier, where you guys had to change the elevation, I guess, did you use that LOMAC? You were just saying was something recent, that you had to change, you helped the bank change something? Or you got a certificate to change, or what made it different?
The Loma, the one
Yeah.
in, right over here?
Yeah.
Yeah, there's,
You said this one was recent?
so, you mean the one right around the White Island, the Marina, right one?
No, you guys were working on one that you did recently? When you just started, you were talking about.
Oh, you're talking about the one in Kailua?
The Kailua one.
Oh, no, that wasn't a Loma, that was just that, it went from an X to an H, they were gonna be able to get a PRP, a grandfathered rate, insurance rate. You know, they built, those are slab, those 4 structures in Kailua, they were built slab on grade, because there was no map. They were X-zone when she built them. They were the unfortunate part was that the preliminary maps were already out, and so, you know, I don't work for the city, so I don't work for the building department, and whether, you know, if the building department shoulda, coulda, like, at least just like said, hey, just FYI, you know, in a year, we wanna elevate this a little bit more, because, you know, at some point, the preferred risk policy, we don't know the future of it. The preferred risk eligibility extension, we don't know what the future is. The program's gonna reauthorize in 2017. We don't know what's gonna happen. If it goes away, it would be nice to know that maybe that property was elevated high enough that they could get a good standard policy post-firm rating on it, because it was built where that finished floor was at least at the base flood elevation, even though, you know, but they didn't have that opportunity. So, you know, the realtor was like, well, should I get an elevation certificate? I can't tell you that, you know, like, it's always good to have, but it costs money, you know, and she was saying that it was gonna cost, her surveyor didn't sound like it was gonna be favorable, but it was gonna be very costly. And I'm like, well, you know, I don't know if it's worth that much that he wanted to charge. If he's sounding like it's not gonna make the grade, I mean, I'm not the surveyor, so I don't know if it's gonna make the elevation. But if it doesn't make the elevation, you just spent that money just so you can get it documented on a piece of paper. When at the very least, the PRPEE, the grandfather rate, is available. It's enough. They can close, you know, they can get that policy and finish up with, because they're in escrow, they're ready to close. I mean, it was just like, I need flood insurance, otherwise we can't move forward with this transaction. And so it was, yeah. So at least now she knows how to deal with the other 3. But I'm sure she went back and changed the listing to an age.
But you as the realtors, you don't want to get that phone call a year later, right? From somebody, not just because you don't want the liability, but also you just don't want it to be that way. You know, you want to do a great job, and this is just one more tool that kind of elevates you above some other people that maybe don't go a little bit, you know, further. Yeah.
I mean, you know, if you guys have questions or you're not sure, and you feel free to call us. I mean, Kristen or myself. I mean, I much rather, you know, like, help you get it right because I get the calls from the property owners, right? They're like, oh, you know what, my realtor, my insurance agent, my blah 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 blah, and then I'm just like, you know, and it's just like we could all work together and we could help these because, you know, it is expensive. I mean, I tell people all the time, they get mad. I was like, I'm just a messenger. I mean, I'm not FEMA. For some reason, people think I'm FEMA, but I'm not FEMA. I work for the state. And, you know, I live in a D zone and I don't have to buy flood insurance, but I have a stream in the back of my house and I don't have it because it's too expensive. I mean, it's just like, you know, I'm sorry, but I can't afford it. Because if you buy D zone, just FYI, it's not mandatory, but if you wanted to buy it, they charge you as if you were in a high risk zone.
Yeah.
So,
Yeah, we checked it out for our house.
Yeah.
It's like, no way.
and I couldn't, and I have a stream in the back, so I told my FEMA counterpart, I said, it's gonna flood the opposite bank before it floods mine, because I'm higher, and he's like, yeah, we always do. I was like, no, I know, I'm using my engineering judgment. It's gonna flood.
If we represent a cash buyer who opts not to buy it, we should document the conversation that we recommended.
Well, I think the insurance agent will do that, you know, if they opt not to, well, that's right, they won't even go to an insurance agent, you know, they
I just put it in an email
Yeah.
that you had suggested it,
Yeah.
and then that way you have.
that might be,
something
that might be,
on
it
record.
couldn't hurt,
Yeah.
it couldn't hurt,
You have something on
definitely
record.
it couldn't hurt, because if they're got cash to buy, they got cash to hire a lawyer to sue you when they get flooded. Yeah, no, that would probably be a good idea. Because I know the insurance agents do this the same. They make people sign when they opt not to get it, especially when they pay off their mortgage and they come in, they want to drop it, then they get flooded and stuff, so.
So the properties that became an issue with the bigger water pool or whatever, and that, like the example that it went from like 6,000 up to 5,000, and then they went back and they changed it for everybody. Is there a chance, I'm thinking in terms of if I find a property that's in a certain flood zone, is there a chance that at those 4 years that those rates are gonna go back up again? Like, do we need to be letting clients who are interested in those zones and the rates are relatively low, that maybe in 4 years that it's gonna go right back up?
That, you know, that preferred risk policy, that's not for everybody now, you know, that, those are grandfathered, but just, that's a good question, because, rates can increase up to 18% a year. Depends on the zone, age of structure, and then, if it's a non-primary residence or business, those are increasing at 25% a year. So it's very, very costly. Those rates that I showed you, the ones at the end at BFE, those are today's rates for post-firm structures. So, you know, that $400 one is only if they can show that they were in an X before going into, you know, a high-risk zone. But if they can't, they're going to be paying either a subsidized rate, which is on the order of about $2,000 to $3,000. That's what the subsidized rates are going for an A zone. I don't know what the B zones are. And then think of 18% every year. And then I don't know what after 2017, after they reauthorize, I don't know what, you know, the annual cap would be.
Okay, I think so.
So, yeah.
Thank you so much. So Carol will be here for a few more minutes if you want to walk her through the computer on something, but